Good morning. A little bit late this morning, but that's okay. Definitely in plenty of time. Today is economic report focus. This is the 0DTE morning market analysis. It is Tuesday, January 7th. And we're going to start by taking a look at our three primary indicators on how we're going to adjust our trades for today. And then we're going to go over the economic reports that are out today and how they may impact the market this morning, how we adjust our trades based on those reports, and the study that we perform on economic reports. You'll be very interested in that. There is going to be a download for you in the description. So the three primary things that we're looking for is big picture volatility, morning IV, so that we can adjust or gauge the width of our flies that we're going to be putting on, our out-of-the-money asymmetric positions. Also, the direction of the market. So are we going to have a bullish or a bearish bias? And then finally, we're looking at, getting distracted here. Finally, we're looking at the entry setup. In other words, where's the opportunity for us to get in given that we're going to be either bullish or bearish? All right. So first of all, the VIX this morning is in at now below the 17 level that demarcates Goldilocks zone from zombie land. We are definitely somewhere between a 10 and 20 wide. I'm going to sort of lean a little heavier, maybe 15 to 20 wide. And our next thing is looking at where the big ass fly is so that we can gauge where in that range that we should be. And this is why I'm looking at heavier, maybe even to 25 this morning. So if we look at the big ass fly, got to go to Thinkorswim. We can see clearly that, you can see clearly, but I can't because I have to switch my view here. We can see that we're under 25, meaning that there is elevated IV this morning, indicating that we're probably moving in, the market's a little bit excited because of those economic reports that are piling up this week. Because normally when you have a VIX that is low as it is, you don't normally see the 50 wide at the money fly, which I call the big ass fly, in the morning under $25. Usually it's $30 or higher. But that heightened expectation for those economic reports, especially considering where we are in this market, got to consider today's. Let's go back to the economic report so we can talk about that. Is the focus. Oh, we were going to say do one more thing here before we go deep into that and look at our direction, where we still have a bullish bias. As you can see here, we're above the moving average. And for the opportunities, our market structure is showing that on the ES anyways, we're looking for a pullback to one of these structural levels. So at 60.18 is a strong level, and 60.35 on the ES. And also down here at 58.96. This is the bottom of the node that we're currently in. The top of the node is up here at 60.76. So we're smack dab in the middle of that node with this golden line here at 60.35. On this particular node, it's relatively immature, so it's kind of bifurcated, kind of a forked tongue. And so there's a strong area here above and below. They're equal in strength, but there is a deep crevice right in the middle right here. So you can see yesterday we actually used that as one of our launching points for a bullish fly, which worked out very well. It was a quick trade in the morning. It then started to roll over, and so we got out with some good profit, or most people did. I didn't because I wasn't paying attention, and I didn't get it until it rolled over a little bit, and I only made I think it was 40 cents on my position. But most people would have had an opportunity easily to make $2 or $3 in a quick morning trade. All right, so there we are. There's our analysis. Now take a look at economic reports. And first we want to see what's up here. It's Tuesday, so we're looking at the ISM Services PMI and JOLTS Job Openings. Why are those important? Why are those important? Well, let me tell you. So those reports, the ISM Services PMI and the JOLTS Jobs Opening, both are crucial for gauging the economy's resilience. The ISM Services PMI shows strength of the services sector, while the JOLTS Job Report reveals labor demand. Now, the strong numbers could justify the Fed's decision to reduce the expected rate cuts, which the market didn't love, right? But signals economic stability. So in other words, we're in this kind of opposite world theory. So now, if we have good reports, that's bad for the market because the market wants cheap money. The market wants the Fed to reduce the interest rates. And they said that they went from 5 potential cuts this year down to 2. And of course, the market took a little tizzy over that. Of course, this data today comes ahead of 2 other crucial jobs report. We have the ADP tomorrow and Friday's job report, or the job situation report. And that sets the whole tone for the week. And that's why each morning, even though the VIX is low, we do have heightened implied volatility in the morning, giving us this opportunity for the big ass fly trade. So watch out for a strong report this morning, which is coming up in just 25 minutes. That might pressure equities as the rate cut hopes dim. Well, the rate cut hopes are dim. They've already announced it. That's however, weaker results could resurge those hopes. So in other words, if we get bad reports and the market thinks that the Fed might continue their rate cuts or advance them a little bit more, then we might see another, a surge in the current rally. All right. Hopefully that makes sense. We are definitely in this situation of opposite world where good is bad and bad is good. And that's what the Fed provides for us. Yeah, right. Sure. We're not a meritocracy. We're 100% led by the Fed's whatever they do over there with 400 PhD level economists. So there you go. Also, I wanted to show you the the download that we have. And very useful tool. It's what we call the Economic Reports database, and it lists all the current reports that are that come out each morning or most mornings, and puts them in order of their potential impact on the market. Here at 0DTE, we're a pretty adroit study of these reports. We want to know their potential impact, not only the top line numbers, but also the bottom line numbers. And it's an important piece of data for any options trader that's trading 0DTE. You need to understand how these reports can affect your trading day. And so this database lists all the reports that are likely to come out. You can see I've highlighted the ones that are here today, and you can see ISM Services PMI is right near the top of the list with a ranking of 8 in potential impact. And JOLTS Job Openings, when you consider in the context of the fact that we have ADP tomorrow and we had employment numbers yesterday and then the job situation report on Friday, I would say 6 is probably kind of weak for this week, particularly in the context. It might even be a 7. So we have 2 very impactful reports today, and that's why implied volatility is so low. This I'll have in the description below right after I get off this analysis, where there'll be a Google Sheet as well as a downloadable. Well, the Google Sheet will be enough. Then from the Google Sheet, you can download the Excel file if you want that. All right. All right, so there you go. Looks like we're 15 to 25 wide, bullish bias, looking for those pullbacks to those structural levels, and we're looking for a little bit of activity today, depending on how those reports pan out. That's it for now. I want to thank you all very much. Don't forget the School Academy, the Zero DTE Academy. It's also in a link below. It's where you can learn all about trading Zero DTE options. And that's all I have for today. We'll see you tomorrow. Coach Ernie out.